Welcome back to Bull Mindset. Have you ever wondered why you can study trading for hours, understand your strategy, and still struggle with patience, focus, and discipline when the market opens? The answer might have nothing to do with your trading system. In today's video, you will learn how high dopamine activities outside of trading may be silently damaging your attention span, reducing your patience, and making it harder to follow your trading plan. Stay until the end because understanding this concept could completely change the way you approach trading psychology. And if you're serious about becoming a disciplined trader, consider subscribing to Bull Mindset. Now let us begin. Most traders believe their biggest challenge is the market. They believe they need a better strategy, a better indicator, a better entry model, a better risk management system. And while those things are important, many traders completely overlook another factor: their lifestyle. More specifically, how they train their brains outside of trading hours. Think about the average day of a modern person. The alarm rings, the phone is checked immediately, social media notifications appear, messages arrive, videos start playing, news headlines compete for attention. Entertainment is available every second of the day. Before many people even leave their beds, their brains have already consumed more stimulation than previous generations experienced in several hours. This constant stimulation changes the way the brain operates, and it affects trading more than most people realize. Now let us talk about dopamine. Many people misunderstand dopamine. They often think dopamine is simply the pleasure chemical. But dopamine is more closely connected to motivation, anticipation, attention, and reward-seeking behavior. Dopamine itself is not bad. Without dopamine, people would struggle to pursue goals. They would struggle to learn. They would struggle to stay motivated. The problem is not dopamine. The problem is excessive stimulation. The problem occurs when the brain becomes accustomed to constant rewards, constant novelty, constant excitement, constant entertainment. Because once the brain adapts to that environment, slower activities begin feeling less attractive. And trading is often a slow activity. Professional trading involves waiting, watching, observing, being patient, doing nothing for long periods of time. This creates a conflict. The brain wants stimulation. The market requires patience. The brain wants excitement. The market rewards discipline. The brain wants immediate gratification. The market rewards delayed gratification. This conflict is where many traders struggle. Now think about social media platforms. Every swipe brings something new. A different video, a different image, a different story, a different emotional reaction. The brain receives reward after reward after reward. Then suddenly the trader sits in front of a chart. Nothing happens. The market moves sideways. No setup appears. 10 minutes pass. 20 minutes pass. 30 minutes pass. The trader becomes restless. The trader feels bored. The trader feels uncomfortable. And that discomfort creates pressure. The trader starts looking for trades that are not really there. The trader enters early. The trader forces setups. The trader creates activity because inactivity feels uncomfortable. The problem is not market conditions. The problem is psychological conditioning. Now let us discuss something important. The market does not pay traders for activity. The market pays traders for discipline. This is one of the hardest lessons to learn. Many new traders think success comes from doing more analysis, more trades, more screen time, more action. But professional traders often succeed because they do less. They wait more. They filter more. They ignore more. They remain inactive until opportunity appears. This behavior becomes difficult when the brain has been trained to seek constant stimulation. Now let us discuss attention. Attention is one of the most valuable assets a trader possesses. Without attention, analysis becomes weaker. Without attention, discipline becomes weaker. Without attention, emotional control becomes weaker. Yet modern life constantly attacks attention. Notifications interrupt concentration. Messages interrupt focus. Videos interrupt thinking. Every interruption teaches the brain to switch attention rapidly. Over time, deep focus becomes difficult. This creates serious challenges for traders. Because successful trading often requires concentration, the ability to observe patiently, the ability to monitor situations calmly, the ability to stay engaged without becoming impulsive. Now imagine two traders. The first trader spends several hours each day consuming short-form content. Every few seconds, a new video appears. The brain becomes accustomed to rapid stimulation. The second trader limits unnecessary stimulation. Less scrolling, less distraction, more intentional focus. Which trader is more likely to remain patient while waiting for a setup? Which trader is more likely to avoid overtrading? Which trader is more likely to follow a trading plan? The answer becomes obvious. Now let us discuss delayed gratification. This concept is critical for trading success. Delayed gratification means sacrificing immediate rewards for larger future rewards. Trading requires delayed gratification constantly. You wait for setups, you wait for confirmations, you wait for opportunities, you wait for trades to develop. You accept small losses to protect long-term performance. Everything about successful trading depends on delayed gratification. But many modern activities teach the opposite lesson. Immediate rewards, immediate entertainment, immediate stimulation, immediate satisfaction. When the brain becomes accustomed to immediate rewards, patience becomes harder. And when patience becomes harder, trading becomes harder. Now let us discuss boredom. Most traders fear boredom. Professional traders often embrace it. This may sound strange, but boredom is frequently a sign of discipline. When a trader sits patiently and waits for a quality setup, boredom may appear. That boredom is not necessarily a problem. It is often evidence that the trader is avoiding impulsive decisions. Many traders enter bad trades simply because they cannot tolerate boredom. They want action. They want excitement. They want movement. The market becomes entertainment rather than a business, and that shift creates problems. Professional traders understand something important. Trading should not be exciting. Consistent trading is often boring, and that is a good thing, because boring behavior is usually disciplined behavior. Now let us discuss emotional control. High stimulation activities affect more than attention. They also affect emotional regulation. When the brain becomes accustomed to frequent rewards, emotional balance can become weaker. Small frustrations feel larger. Waiting feels harder. Patience feels more difficult. The ability to tolerate discomfort decreases. This directly affects trading performance, because trading involves discomfort. Losses happen. Waiting happens. Uncertainty happens. Frustration happens. Professional traders learn to tolerate these experiences. Traders who constantly seek stimulation often struggle with them. Now let us discuss another hidden problem: comparison. Many highly stimulating platforms encourage comparison. You see traders posting winning trades, luxury lifestyles, fast profits, big account gains. The brain begins comparing. Comparison creates pressure. Pressure creates impatience. Impatience creates mistakes. Soon the trader is no longer following a personal process. The trader is chasing someone else's results. And chasing results often leads to emotional decisions. Professional traders focus on their own development, their own growth, their own consistency. Because comparison rarely improves performance, it usually increases emotional stress. Now let us discuss another important idea. The brain adapts to whatever environment it experiences repeatedly. This principle is powerful. If you repeatedly train distraction, distraction becomes stronger. If you repeatedly train impatience, impatience becomes stronger. If you repeatedly train instant gratification, delayed gratification becomes harder. The opposite is also true. If you repeatedly train focus, focus improves. If you repeatedly train patience, patience improves. If you repeatedly train discipline, discipline improves. This means trading psychology extends far beyond trading hours. Your habits during the day influence your behavior in the market. The trader who spends all day distracted often struggles with focus. The trader who trains concentration often performs better under pressure. This is not magic. It is conditioning. Now let us discuss another reality. Many traders spend years searching for better trading systems, yet they never examine the systems controlling their attention. They optimize entries, but ignore distractions. They optimize indicators, but ignore habits. They optimize charts, but ignore mental conditioning. And because of that, progress remains slow. The truth is that trading performance is often influenced by what happens before the trading session even begins. Your focus enters the market with you. Your attention enters the market with you. Your habits enter the market with you. Your conditioning enters the market with you. And this is why understanding dopamine and attention is so important. Because success in trading is not only about reading charts, it is about managing the mind that reads the charts. If this lesson is helping you see trading psychology from a different perspective, consider subscribing to Bull Mindset, because many of the biggest breakthroughs in trading happen when traders stop focusing only on the market and start focusing on themselves. Now let us continue by looking at some real trading examples. Imagine a trader who wakes up and immediately starts scrolling through social media. 30 minutes become 1 hour. 1 hour becomes 2 hours. Dozens of videos are watched. Hundreds of posts are consumed. The brain is constantly stimulated. Every few seconds, something new appears. A new story, a new image, a new emotional reaction. By the time this trader opens the trading platform, the brain has already been trained to expect constant novelty. Now the market opens. The charts move slowly. No setup appears. The trader feels restless. The trader checks other charts. The trader switches between time frames. The trader looks for action. Eventually, a weak setup appears. The trader enters early. The trade fails. The trader blames the strategy. But the real problem was impatience. Now imagine another trader. This trader avoids unnecessary stimulation before the session begins. No social media. No endless scrolling. No random videos. Instead, the morning is calm. Preparation is intentional. The trader reviews the plan. Reviews key levels. Reviews risk parameters. Then, waits. When the market moves slowly, patience feels natural, because the brain has not been conditioned to expect constant excitement. The difference between these two traders is not intelligence. The difference is attention management. Now let us look at another example. Imagine a trader who spends several hours every evening playing highly stimulating games. The games provide constant rewards, constant action, constant feedback. The next morning, the trader sits in front of the charts. The market feels slow. The market feels boring. The market feels uninteresting. Why? Because compared to the stimulation of the game, trading feels quiet. The brain begins seeking excitement. The trader starts creating action where action does not belong. This often leads to overtrading. Not because opportunities exist, but because the brain has become addicted to activity. This is an important lesson. Many traders are not addicted to trading. They are addicted to stimulation. And trading becomes another outlet for that addiction. Now let us discuss some powerful mental frameworks. The first framework is called Protect Attention Like Capital. Every trader understands the importance of protecting money. Stop losses exist to protect money. Risk management exists to protect money. Position sizing exists to protect money. But attention deserves similar protection. Attention is a resource. Every distraction withdraws from that resource. Every unnecessary notification consumes part of that resource. Every interruption weakens concentration. Professional traders treat attention as an asset, because without attention, discipline becomes difficult. The second framework is called Earn the Right to Trade. This idea is simple. Do not allow yourself to trade until you have prepared mentally. Preparation is not only chart analysis. Preparation is emotional readiness, focus, calmness, patience. If those qualities are absent, trading should wait. Many traders prepare charts. Few traders prepare their minds. The third framework is called the patience advantage. Most people believe trading success comes from finding better entries. Professional traders often understand that success comes from avoiding bad entries. The trader who waits gains an advantage. The trader who filters opportunities gains an advantage. The trader who remains patient gains an advantage. Patience is not weakness. Patience is a competitive advantage. Now, let us move into practical exercises. The first exercise is the 1-hour dopamine delay. For the first hour after waking up, avoid highly stimulating content. No social media, no short-form videos, no endless scrolling. Allow your mind to wake up naturally. This simple habit can dramatically improve focus. The second exercise is scheduled entertainment. Most people consume entertainment randomly throughout the day. Professional traders often create boundaries. Entertainment has a time. Work has a time. Trading has a time. When boundaries exist, attention becomes easier to manage. The third exercise is silence training. Spend 10 minutes each day without stimulation. No phone, no videos, no music, no notifications. Simply sit quietly. Observe your thoughts. Allow boredom to appear. This exercise may feel uncomfortable at first, but discomfort is part of the training. Over time, The ability to tolerate stillness improves, and that ability directly improves patience. Now let us discuss another exercise, the focus walk. Before trading, take a short walk. Leave the phone behind. Do not listen to content. Do not check notifications. Just walk. Allow your thoughts to settle. This creates mental clarity, and mental clarity improves decision quality. Now let us discuss another important topic, the relationship between stimulation and risk-taking. Research and experience both suggest that people often seek stronger stimulation when they become accustomed to high levels of excitement. This tendency can appear in trading: larger positions, more trades, more aggressive behavior, higher risk. The trader begins chasing emotional excitement instead of consistent execution. Professional traders understand this danger. They do not seek excitement, they seek consistency. Consistency may feel less exciting, but consistency builds accounts. Excitement often destroys them. Now let us discuss identity. This is one of the most powerful concepts in trading psychology. Many struggling traders identify as excitement seekers. They want action, they want movement, they want constant engagement. Professional traders develop a different identity. They see themselves as disciplined decision makers. They see themselves as patient observers. They see themselves as risk managers. This identity influences behavior. When you identify as a disciplined trader, patience becomes easier. When you identify as a risk manager, impulsive behavior becomes less attractive. Identity shapes actions, and actions shape results. Now let us discuss recovery. Attention requires recovery. Focus requires recovery. Mental energy requires recovery. Many traders underestimate this. They consume stimulation all day, then wonder why concentration feels weak. Recovery activities matter: reading, walking, journaling, meditation, quiet reflection, exercise, sleep. These activities restore mental resources. Professional traders understand that performance depends on recovery. A tired mind makes poor decisions. A distracted mind makes poor decisions. A recovered mind performs better. Now let us discuss another powerful lesson. You become what you repeatedly practice. If you repeatedly practice distraction, distraction becomes stronger. If you repeatedly practice impulsiveness, impulsiveness becomes stronger. If you repeatedly practice patience, patience becomes stronger. This principle is simple, but it is powerful. Every day you are training your mind. The only question is what you are training it to do. Now let us move toward the final takeaway. Many traders spend years searching for the perfect strategy, but no strategy can overcome a mind that lacks focus. No indicator can replace discipline. No setup can replace patience. The market rewards attention. The market rewards emotional control. The market rewards delayed gratification. And all of these qualities can be influenced by your lifestyle. Remember this: the habits you practice outside the market often determine how you behave inside the market. If your life is filled with constant stimulation, patience becomes harder. If your life is filled with distractions, focus becomes harder. If your life is filled with instant gratification, discipline becomes harder. The solution is not perfection. The solution is awareness. Begin noticing where your attention goes. Begin noticing what influences your emotions. Begin noticing how your daily habits affect your trading behavior. Small improvements create powerful results over time. A little more focus, a little more patience, a little more discipline. Repeated consistently, these qualities can transform a trader. So the next time you feel impatient while waiting for a setup, ask yourself an important question. Is the market the problem? Or has my mind become too accustomed to stimulation? That question alone may change your trading journey. If you found value in this lesson, subscribe to Bull Mindset. Keep training your focus. Keep strengthening your discipline. Keep developing patience. And remember, successful trading is not only about mastering the market, it is about mastering the mind that approaches the market every day. Thank you for watching, and I will see you in the next Bull Mindset video.